as we know, we continue with day three, and this is, of course, our property and casualty day. And as we promised, we're always looking to provide you the best, not only training and support, but also the best carriers in the industry. And most of you know our next, our presenter's company, but I'd like to introduce you to one of their outstanding representatives from a national perspective. Now, before I introduce her, though, as you all know, Progressive is a national company, and we do have a national contract with them that allows us to be able to sell Progressive in almost every state. There's a few states that we're working on, but oh yeah, but here's what I'd like to say about Progressive. Progressive is a great company, not only because it's got a national presence, but the product is great. It's solid. It's a reputable company. It's up there. It's ranked number 3 in the country as far as written premium, which means they're big. They're huge. They're a national player that really understands our market, is working constantly to upgrade and innovate in different ways. I mean, if you love their commercials, their marketing's on point. Wouldn't you agree? Yes. So you can see their technology. For those of you who have access, their technology is par none the best in the industry, with having their own mobile app, to having integrations with your metrics. Some of the coolest things are you can actually see your current metrics on your dashboard to see where you're at and how you can get to the next level. That's pretty innovative. We don't have that with any other carrier. I've seen some of the changes that are coming. We've even talked about, in some respects, going to the I-10 world and non-resident drivers and all these things. And you don't hear that from many national players, just so you know. That's not something that you'll hear from a State Farm or an Allstate or any of these other big boys who really don't care about the markets that we live in and serve. And from a national perspective, Progressive is really servicing the right agents. You look at their campaigns. A lot of their campaigns drive those customers to visit an agent like yourselves. They're not trying to drive it to somewhere where they sell it themselves, and that's not their channel. Their channel is to work through us, and I think that's phenomenal. It's kind of like the franchisee system, right? We don't want to work in a corporate environment. We want to be a franchisee who owns, operates, understands their customers and their needs, and that's what Progressive's built with their independent agent channel, which is us. And so I hope you guys take a lot of notes and really pay attention, because Leigh's going to give you a lot of information. So I'd like to introduce our presenter. What's the title? Regional Large Account Business Development Consultant. She's also licensed. been in the business 19 years. I didn't see all this. Leigh Coufal. Give her a round of applause.
So hi everybody. Like I said, I've been with Progressive 19 years. I started out as a Farm Bureau agent. So I've done this long time. Used to sell life and health, that kind of stuff, and then I started working with Progressive. But you guys, I want this to be real informal. How many of you guys are from Texas?
Greatest
okay.
country in the world.
Okay, and out of state? Okay, I know there's Georgia, North Carolina. What am I missing? Ohio? Pennsylvania?
Oh, Florida.
Wow. Okay, now are y'all set up in those states now to write with us, or do you have the system and everything? Or you're getting set up? Yeah. Okay. Okay, and who's Florida?
Right.
I know. Sorry. We'll get it one day.
Okay.
Okay, I'm going to walk around because it's, the light. I'm not used to the spotlight. But the other states, this is going to be Texas specific, but the information is pretty much the same. So if y'all have questions, it's real informal. Just ask away, okay? See if it's okay. So I wanted to let you guys give you a little bit of background of the company, who we are, what we do, and why we're a little different than some of the other carriers that you guys might represent today. Whoops. Now I get it. Okay. So we're actually number 3 in the pecking order of auto carriers in the United States. Anybody have a clue who's number 1?
State Farm.
State Farm. Who said State Farm? You did. Okay. Trucker Flow. For you. I'm gonna be nice to you anyway, because I know what I know the situation. So yeah, we're number 3. Today it is State Farm, it is Geico, so the Geico is second, and then us. Behind us is Allstate. So when I first started here 19 years ago, I was sitting in a meeting. They said, "Yeah, we're gonna surpass Allstate," and we were little back then. So we finally done it, and we're pretty happy about that. But we keep growing, and it's because of, you know, I think when I started, we had something like 10,000 employees, something like that. So we've really blossomed over the years. We're up to 35,000. Founded in 1937. When we started, we were really kind of a non-standard carrier. Okay, we wanted the drunk, one-eyed doctor, whatever, that nobody else would write. That was our niche. We have flourished into a much more preferred company to compete with the Allstates and the State Farms of the world. And what we try to give you is that brand that your customers are going to recognize. So it gives you that pull when you put the Progressive sign out, that the customer is going to feel comfortable buying from you. Okay. And then we're number one in the independent agent channel. We're number one in motorcycle insurance and in commercial. So do any of you guys sell commercial insurance now? Okay, good deal. Coming down the pipe for commercial with us, maybe in the next year or so, we do commercial auto today, but we're going to expand to offer general liability and the T-BOP, or well, the BOP. Yeah, not T-BOP. I'm Texas agent.
Oh,
yeah, business owner
okay.
policy. Yeah. And this year alone, we've grown to 30 billion in revenue. So we're pretty big. We're pretty proud because we know where we came from. It's been a long road, but we feel really good about our agents, and we do value the agents. We want you guys to proudly represent us and give you all the information you need to do that. Okay. So these are our core values: integrity, the golden rule, objective, excellence, and our profit. We don't deny that we want to make a profit. And along those lines, we want to do it with integrity, not stepping on your neighbor, that kind of thing. We want to do it right. And we'll talk a little bit about our profit goals here in a second. Okay. We're a little different because we do feel like we make insurance a little easier than some of the other carriers. Now, I know some of the non-standard carriers, you know, bear with me here. Some of the non-standard carriers, you don't have to fill out a lot of paperwork. You put one thing in and it goes. But I feel like we offer a little better service. We're at a little different level, I think, than some of the other carriers that don't ask a lot, because we do adhere to underwriting guidelines, so we can make sure that we stay on target with our losses and we're charging the correct amount of money for the risk, so we don't end up blowing up your book or having to close down and pull out of the state or whatever. And then the other part of that is when you do have a claim, we're there for your customer. Because everybody knows who sells insurance. When something goes wrong and there's a claim, whose fault is it? Right. It's your fault. It's always your fault. And what you're selling is the claim service. And we feel like we have the best claim service in the industry. So, and we're available 24/7 for you guys to contact. And then we also have a wide range of products, and we try to make them easy to write and easy for the customer to read. So I had a question earlier about homeowners. Anybody else have that question about why you're not writing homeowners or wanting access to homeowners? Let me tell you what's happening with our home product. So Progressive was historically started as auto. We acquired about 4 years ago a regional carrier called ASI Lloyd's. They're out of Florida, very good company, but they're small. They were small regional. We started buying them. We're about year 4 into a 7-year process of the purchase. We started buying them, and we're pushing them, man. We're putting them in all 50 states, and they were small regional. Their team says, hey, hang on, slow down. We don't want to blow up our product. So there's a little bit of a pushback, because we do want to go into the different states, but we don't want to overwhelm the company at this point. So our product managers have not fully taken over yet. We will, and then we'll probably expand it a little more. But the question I was asked is, what can I do today to be considered for homeowners when it's ready? And the best thing you can do today is when you're selling auto, if it's a preferred piece of business, if it's a good piece of business, homeowner, that kind of thing, put it with us or check us to see if you can put it with us. Because when you're considered for a homeowner appointment, what they do is we fill out an agency survey, and it says, this is how much business I have today. And it says, this, we'll look to see how much of it is preferred and if they're homeowners. So we want to see what that potential is. If it's high loss ratio, not real great business, they're going to say that's probably what's going to happen on the home side too. And the chance for losses and blowing up that product is going to be high. So that's where it's at right now. So the best thing you can do today is when you're placing business, if it's a full coverage prior policy, please check it with us and see if you can place it with us, because I think we can give you a good rate. Okay, I think the next one's about our profit. Okay, so our discipline, this is why we're a little different than other carriers. We try to make, our target is to make 4 cents on the dollar. So there's something called a combined ratio. And that's the losses, expenses, everything to write a piece of business. We try to keep that combined ratio at a 96, so that 4% is our profit. And we try to make that profitable for every line of business that we write, whether it's commercial, personal auto, home, motorcycle, boat, whatever. So that's how we're disciplined. Other carriers will say, well, we'll take a little off of this product to try to, pull in this other product, which sometimes works, but in catastrophe events, things like that, the floods in Houston or other states, that can really hurt a company, because then you're off balance, and then you've got to really raise rates and blow up the book. But if you really try to price each product for profit, then you have a little bit more flexibility, and it's worked well for us. I think in the last 20 years, we probably have only missed it once, and that was during a big cat event. But we always try to price and keep that discipline. So that's how we know whether we can lower rates or raise rates, because we're going for that 4 cents. Okay. I don't know if it worked or if it's just thinking. There it is. Okay. 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 So this is kind of how we think of the average customer. So you've got your Sam, that's the young kind of school student kid kind of thing, right? We have a rate for that guy. The Diane is somebody who's maybe just out of college, single, young professional, renter. You have access to the renters market, that kind of thing. And then it goes, as Diane, as that generation kind of grows up, they become the Wrights, the young family with the kids, that kind of thing. And then as they grow older and their kids get older, they become the Robinsons. That's how we see kind of the timeline of the customer. We want to play in all of those markets. So when you're thinking about who Progressive wants or who Progressive targets, we want all of these customers. But we just need to know who they are. So we will do some underwriting. We'll ask some questions, occupation, things like that, where they're garaging, that kind of stuff. So we will ask a little more questions than probably some of the non-standard guys, but we're really just trying to make sure that we're pricing that risk correctly so we can sustain that book. How many of you guys are new to building the insurance book? Okay. And so you're trying to probably figure out, how do I do this long term? How do I become profitable, right? So there's a lot of life insurance people in here. I was talking to them, and I used to sell life insurance. I always think of it as kind of life insurance, term life and whole life, okay? So, the term life you can get real cheap, right? And you can get a lot of it, but at some point it goes away, right? And you have nothing left. You have no money left, right? Whole life, people go, I don't know. But whole life, It's like a foundation, right? It's the foundation of the life insurance. You buy it young, don't pay a lot of money for it. It builds, and over time, it's worth money, and it sustains. Even after, sometimes you don't even have to pay premiums on it, and it still sustains, right? That's how I want you to think of your carriers. So you've got a lot of these non-standard guys who are good at what they do. I don't want to bash them because they're very good at what they do, but they're kind of like the term life. It's going to be churn and burn, right? And in the end, if you ever want to sell that agency or you want your agency to be of value, it's not going to have a lot of value. You need to look for carriers who have that solid foundation, right? Who's going to maintain the customer, serve the customer. That customer is going to stay on the books for a long time. You'll get renewals, they'll stay, and it'll start to build. That's going to be your foundation. So think of it that way. There's room for the churn and burn stuff, but that's a lot of work. Same customer over and over and over again, that kind of thing. And in the end, it helps build your agency. Does that make sense? Okay. Okay. I'm going to get better at this, I promise. Okay. So this is what I'm going to go over real quick. We have lots of products, but I don't want to take up your whole day because y'all would be really bored. But we're just going to do personal auto overview and then quoting best practices, and then we'll look real quick at motorcycle. Okay, and then y'all can. But seriously, if y'all have questions throughout any of this, just jump in. Okay, so the product highlights are we do foreign driver's license. So as long as they have a license number, you just put that license number in like anything else. And in the drop down under violations, you just select FDL, which is foreign driver's license. And then it will rate that accordingly. We can do the named operator policy. And we have additional equipment up to $5,000 on the auto policy. Now, $1,000 of that is already included when you put the comp and collision on, okay? Up to $60 a day for rental reimbursement with a max of $1,800. And then we have the zero glass deductible. Now, you have to purchase that. You have to select that in your coverages. But the zero glass deductible doesn't cost a whole lot. And it really is great when the customer can just say, hey, you know, I've got a ding or whatever, and you just go handle it. And then we have roadside assistance that you can also select. I know some of the non-standard guys have roadside assistance, but I think you have to go through an outside source to add that. And with us, you just select it on the coverages. We can do stated amount up to $250,000 and a combined single limit for liability up to $500,000. Rarely people do that unless they need it for underlying limits or whatever, but we do have that. The gap insurance coverage, do any of you guys know what that is? No. Okay. Yes? Okay. Yeah, I know you do. This is actually a really good coverage. So you know how today when you finance cars, sometimes you can finance them for like 7 years or even 5 years. It's ridiculous. And so as soon as you drive off the lot, right, your $30,000 car is now worth $25,000. If you total that car, you're only going to get the $25,000 from the insurance company because they pay you the value of the car. If you have gap insurance, Gap is going to provide you that extra $5,000. Okay, so it's very inexpensive. The car dealerships try to sell it to their customers today, and they roll it into, it's very expensive, and they roll it into their loan, and then they pay interest on the premium, and it's a nightmare. This is not expensive, and it'll pay up to 25% above the value of the car to cover that gap. Okay, so it's a really good coverage, and all you got to do is select.
So if a client asks, how do you determine between 0 to 25%?
Yeah, well, there's a value. So Kelly Blue Book, that kind of thing, there's value stated, right, for how much a car is worth, and you know, if it's got so many miles or whatever on it. And so that's what they look at. But brand new, as opposed to what retail is after it's used, not the same. Not the same.
Kind of similar lines with she that. What kind of like
if they miss payments or anything like that, would stop them from like getting the proper gap coverage or whatever, or if they do get it, will it, because I have a bad taste in my mouth when it comes to gap insurance, but what would stop them from, like, if they do get into a car accident, right, with a brand new car, and they've had the car for like 2 years or so, and they did like missed payments or whatever, or not just missed payments, but
On the insurance
on
policy?
just
Oh,
the
on the
car
gap.
loan in general.
Oh, because they had gap with the financing.
Right.
Mm.
So then, because I wouldn't want someone to go through what I went through, to where the gap coverage doesn't cover the full amount or cover the gap.
Well, with our policy, and probably if they financed it through the dealership, which it sounds like they did, and if they missed payments on the car, then they probably canceled the gap policy because they were, they were delinquent in the payments. That's what I'm thinking. I don't know, but with our policy, it's easy. I mean, you've got to have the policy in effect. If it's in effect, it should be it should be covered. It won't matter as long as they still own the car. It won't matter.
Okay. So do they go by the Kelly's Blue Book, or do they go by the market value?
They go by market value.
By market value.
Yeah.
So they still think Kelly's Blue Book is still maybe value more.
Yeah. I mean, they have software programs that figure out what the value is, but yeah, it's the market value of the car. Okay, and then everybody rolls their eyes when we say we have $2,000 deductible, because everybody's like, yeah, right. Well, but seriously, I used to insure this guy that had 4 kids, and none of them knew how to drive. They all had wrecks and accidents, and he insisted on buying them brand new cars and all this stuff. It's fine, but well, I know my kids too well to give them a brand new car. but his premiums were ridiculous. I mean, just ridiculous. And we didn't have the $2,000 deductible then for the comp and collision. But the guy, he had the means. And when you've got to provide insurance and you're paying that kind of money for an insurance policy, $2,000 is probably not a bad deal if you want to get your premiums down. So it is an option. And the other thing that we have that can go along with that is the deductible savings bank. So if you select that, every clean renewal you have every 6 months, the deductible savings bank puts $50 into a savings bank, and it builds and builds as long as the policy is in force. So if there's ever an accident or a claim, you can pull from that deductible savings bank to help pay the deductible.
Do they get a discount
For the deductible savings bank? No, they don't get a discount. In fact, probably like $2 or $3, but yeah. But yeah, it's a pretty decent deal because it doesn't, there's no cap on it, and you can use it for any car on the policy. It just helps with that deductible. The other thing you can do with the deductible savings bank is think of it this way. If, how sometimes the customer will come in and go, wow, my premium went up. What am I going to do? You could say, well, you've got $500 in your deductible savings account. Why don't we increase your deductible and bring down your premium? So that gives you a retention option too, right, to kind of help with that. Pet injury coverage, I think we're the only company that offers this. And when it first came out, it just made me laugh. But it really kind of is a neat deal. So if you have comp and collision with our policy, there's $1,000 of pet injury coverage that comes free with the policy. And that's if you're cat or dog. That's it. Cat or dog, not snake, lion, whatever. It's just cat or dog. Is injured or killed, you get the pet injury coverage. So.
That's injured and killed on a car accident.
In a car accident, yes. Yeah.
Okay, so if they fall off the truck, it doesn't.
No, if he's in the car and you're going down the road and there's but that's not really well, I don't know. That's actually a good question. I don't know if they would cover that or not. Is he jumped off?
Well, some drivers are weird, and thank God, only once in my life I saw this guy just dog flip over the truck.
Oh my gosh. Well, that actually may be covered. I don't know. I've never run across that.
So how does the coverage work? Do you just give the client $1,000 and here take bury your dog.
There you go.
Well, you file the claim, you know, and you gotta, I don't know if they want to see the body or not. But yeah, death certificate. But yeah, I mean they'll pay you that to replace the dog or the cat. Yeah.
I know a lot of people who are like they take care of their dog more than they take care of
Oh, my
their
mom
kids.
loves her dog more than me. I mean, it's ridiculous. Yeah, I got her a little collar for her dog, and she went and bought rhinestones and blinged it all up for the dog. And it was like, oh gosh, it's crazy. But the other thing it does, you know, from my standpoint, I think of from a marketing standpoint, veterinary clinics, right? You go in because that's where all the big pet lovers are, right? Boarding, you know, pet boarding places. You can go in and say, hey, you know, we offer pet injury coverage. You know, we know you love your pet, that kind of thing.
Can they upgrade the coverage?
No, can't upgrade the
So
coverage.
it's only in auto.
Yes, it's only in auto.
Do they have to submit any proof that they actually do have a pet? Or-
Yeah, I mean, yeah, I'm sure, I don't know how that claim process goes, but they're not going to just pay it. I mean, you're going to have to show, I don't know, here's me with Fluffy, you know, and here's Fluffy. Or, I don't know. Yeah. That was Fluffy. Yeah.
No longer.
No, Fluffy can get injured. Fluffy can get injured. Right. Yeah. 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 Fluffy could get injured. You'd have the vet bill. Yeah. Yeah. So, and then we have trailer coverage up to $50,000 that you can endorse onto the auto policy. Okay. We're going to look real quick. I'm not going to bore you guys because this could get boring, but I don't want to go too fast. If I'm going too fast, tell me. But we're going to look at how to quote through the ITC rater, and then we'll look at our rater too. So all you guys use ITC? Does it still look like this, or is this old? Okay, because I haven't seen, I've been using this presentation for a while, so. So I'm just going to go through here and tell you some things that are kind of important to look at when you're quoting through ITC as it refers to our product. So if you quote a policy in advance before the day they need it, that's going to give you a little bit of a discount. So on the effective date, be sure that you're putting, if they have prior coverage, be sure you're putting the expiration of the prior coverage, right? Because that way you'll always have the right date in. It's going to default to today's date, but if they do have prior and they don't need it today, put in that expiration date because that'll give them a discount. Okay. Oh yeah, that's what I'm talking about right there. Okay, the other part of it is how many years have they been with their prior carrier? If they've been with, you know, if they've been with them a year or 2 years, that's fine. Be sure and put that in. If they've been with them 3-4 years, be sure you put, I mean, just put it in there. If they've been with them 5 years, by all means, put that in there. Okay, because that's what we're looking for. The longer they've been with them, the better rate they're going to get. Now we will check. so you know, ask them, how long have you been with them? The other thing is we have preferred prior carriers. So if you run into a customer who's coming from State Farm or Allstate or Safeco or actually we used to have Geico. Geico's not one of them any longer because we didn't think we were getting good business from them. But Travelers, Hartford, put that in there. Always put who the company is, because if it's a preferred carrier, it'll put them in a better tier. Okay.
What if they don't know how many? If they've been there 6-7 years, they don't know the dates of the times. You just put an estimate.
Yeah, if they know they've been there more than 5 years, put that estimate in that reflects the 5 years. Okay.
The progressive system will pick it up.
Yeah, we'll search in the background.
Yeah.
Sometimes now, most of the time we'll find it because there's a database that most carriers report to that we'll find it. Sometimes we won't if it's a carrier that doesn't report to that system. So if some of the non-standard guys don't report to that system, but the State Farm, the Allstate, those guys do. But in ITC, it's not going to run that yet. So when you're trying to get that best rate on your comparison, be sure and pay attention to
So
that.
your system caps out at 5 years. So
Well,
I save someone 15.
you can still put that. I mean, that's still good. But yeah, the 5 is kind of like that age. Yeah, right. Okay, so yeah, now I'm remembering this. Length of prior and prior insurance carrier are important. And then, okay, nobody likes this question. You know, what do you do? They don't like the occupation question, but it's really, it doesn't have to be an uncomfortable question. So you know how when your customer comes in, you're talking to them, a lot of you guys are tax guys. I mean, you probably already know what they do, but just be sure that you're putting that in as a reflection of the rate that you're entering. So we had, and I say this because I talked to another large account, and their machines, you know, they just go in and just rate, and they were defaulting to unemployed and homemaker and disabled. It's like, that's not going to give you a very great rate. So if the occupation is a discount, right, and it's tied with the education, it's not a rating factor. It's not going to rate them off of it, but it will kind of give them a discount, okay? So be sure and ask that question.
So your educators or military, that will be the one.
Yep.
To be able to get that.
Yep. Yep, that's a good one too.
So they're retired military, they just select military?
You can put retired too. Retired's fine. I mean, there's nothing wrong with any of those things, but it's consistent. You're not really getting the correct rate for the risk. So be sure and just ask them what it is that they do. If you're not sure exactly what they do, it's like my brother, he's kind of an engineer guy. And so every time I ask him what he does, he, takes 2 hours to tell me. Zone out like after 5 minutes. So I still don't know exactly what he does, but he's like a software guy. So if you don't know exactly what he does or what they do, just make your best guess, but don't make off the wall guesses. Make an educated guess. Okay. And then the next one is going to be the education level. This one, nobody likes this. I think Safeco was the first company that started the education level question, and nobody liked it, but they used it as a rating factor, and that really was kind of uncomfortable. This, again, is just a discount. And if, I don't like to ask, so, what highest level of education do you, that's a horrible way to ask. I would just, in conversation, hey, where'd you go to school? Did you grow up here? Really? Did you go off to college? Whatever. Really? What did you do? What do you do? Just make it all very conversational. And it'll let you know your customer better, and you'll better serve your customer as well. But it doesn't have to be an uncomfortable conversation.
Why does the education matter for a discount?
Interesting, because the data backs up that for whatever reason, when you do claims across the industry and you put in the data of how much claims on education levels, it's lower the higher the education level.
Really?
I don't know why.
That is not
They
so.
drive there.
Yeah, I remember I had a product manager when credit. How many of you guys remember when insurance industries started checking credit? Do y'all remember that? Oh gosh, it's horrible. Well, when I started in the industry, I mean, it was, are you married? How many cars do you have? And what's your driving history? And that was really the kind of it. And then credit-based rating came into play, and the data backs, it's all data-driven, and nothing can be approved in the insurance industry unless they can show that it has substance, right, in rating factors. So credit became a very strong indicator of claims. And I had a product manager, and, agents were just not having it. They were like, no way, I am not doing this. And he says, look, I don't know why Sally with the good credit can drive down the road and be fine, and and Cindy with the bad credit can drive down the road and take out, 2 fences and 5 cars. I don't know why that happens, but it seems to happen. So, but it's just the data. It's just what the data reflects. I know. I mean, I always remember him answering the question that way because I was like, well, it's just what the data says. So
It's just gonna be designs.
yeah, now it's getting so ridiculous though. This is just me talking, but I think the rating factors are so ridiculous now because there's so many. We used to could say, oh, the premium's going to be about this. We have no idea now because every risk is different, and everybody there are so many factors that now go into rating that there is no way to predict now. And that was another battle we had when we were talking to agents early on. It's like, you have to quote us for everything. They'll say, well, you're no good on that. And it's like, no, you have no idea because everything is so different that you really don't know what that rate's going to be until you put all the information in. I mean, we can be good on certain segments, like young drivers. I think we do pretty well with, the Robinsons and the Wrights and Sams and Dianes, that kind of stuff. I mean, but you really don't know until you put the information in. So, okay, so this is what our system looks like. So once you get through ITC, do any of you guys know if y'all have that choice rate with Progressive?
Yes.
You do? Okay, let me tell you what choice rate is because I don't know if I'm a fan of it. I know what we're trying to do with it, but I don't know if I think it helps y'all very much. So choice rate assumes that it's going to be EFT, it's going to have a multi-policy discount, and you're going to have Snapshot. Y'all know what Snapshot is? Okay. So it assumes all of that, and it gives you the best rate because back in the day when we were trying to come up on these raters, we didn't want to we wanted to show our best rate so you would bridge and do all this stuff. That's great and that's fine. But a lot of the times, if you don't know what's in choice when you bridge over, you don't know that it's got a multi-policy discount on it or an EFT, and so sometimes you miss things. So that choice rate is assuming lots of things, right? Paperless, Snapshot, EFT, and multi-policy discount. Okay.
Driverless.
Oh, the Snapshot? Yes. So it's assuming all of those things. So when you look at that rate, that is the best rate with all of those discounts, okay? They're probably going to qualify for some of them. They're probably going to want some of them, but they may not want all of them. So if the other rate that's on there, the regular Progressive rate, is the rate based off of the information you have put in. And so I would much rather you guys put in all the right information, get the rate, and then bridge over and check it to make sure that you didn't miss any other discounts, okay? Because I think that's a better process. The other stuff, choice, I know what they're trying to do with that, but I don't know if that's helpful to y'all because then it becomes uncomfortable when one of these discounts falls off and the customer's like, hey, what's going on? Right. So anyway, so with our new, well, it's new. So did you guys remember the old system? Okay. Well, we call it portfolio quoting. And what we're trying to do with this is make it easier. We're trying to make it easier for you guys to cross-sell several policies and have that conversation with the customer about all of their policies they may want other than just one, okay? So to start a quote, well, let me spend a little bit of time here. So to start a quote, you just go to New Business and New, and then here on Quote Preferences, that's where y'all set up what the limits you want to be your defaults and that kind of thing. And then over there, I'm going to walk over here, right here on Print Addresses, that's going to set up the print address that comes out on your quote sheets and stuff like that, okay? So if y'all haven't done any of those stuff or your quote preferences, you can go over there to the quote preference section and set all that up. So once you select new quote, it's going to look like this. So it wants you to have that conversation about, hey, you know, we're here to quote auto. Do you have any of these other things? And if you do, you can select not only auto, but boat or commercial auto, those things. I know we don't have the property right now, so, but it's in there. So you can select several products, and then it'll quote them all at the same time. So you only have to enter that information in once. And then as you go through as you go through it, you know, you can go through the auto because that's the primary one. If you want to go ahead and finish the quote on the other one, you can finish the quote on the other line. If you want to suspend that quote for later, there'll be a part in there where you can hit suspend, and it'll just keep that information for later. So it's really trying to help you with the conversation to have with the customer about all of their products. And then you'll come in here, and I don't know if they did circles on this. Yes. Again, we were talking about the effective date of the policy, right? You want to put in the expiration of the prior insurance. And then that's the education, occupation again. Okay, I'm gonna have to put my glasses on for this. I can't even see. Okay. Okay, yeah, this is where we're talking about the prior carrier, and be sure that if you put in who that prior carrier was, because if it's a preferred prior carrier, how long they've been with them, that kind of stuff. Everything that we've talked about in ITC. And then it'll look to see if there's any, our system will look to see if there's any pre-checked other products that you checked in that original portfolio screen. Okay, and then this is the coverage page. So this is where you select all the coverages, the limits you want to have, the med, PIP, comp, and collision. And then it's a big page, so there's like 3 slides, but okay. And then it's going to go to the rental coverage, the roadside assistant. If you want to increase the custom parts up from $1,000 up to like $3,000, that's where you do it. And payoff is the gap insurance. I don't know why they call it payoff. It's gap, but maybe they felt that it was probably more memorable if you just called it what it is, which is pay it off, right? Payoff. And then the enrollment to the Snapshot. I know y'all have to have questions about Snapshot. Do y'all want to know about Snapshot?
Did they actually send you that
That's
little
just
thing
where
with
Flo
the
can spy on you, right?
I will tell you, I did Snapshot when it first came out, me and my 17-year-old son. And when I did it, the program was, you could get up to 30% off, okay? And there was no participation discount at the time because we've gone through several versions of this. But, so I ended up getting the full 30. He got 14% off, which I thought was pretty impressive for a 17-year-old kid. But his sister had a good time because it'll beep at you, if you hard brake. It'll go beep, beep, beep to try to remind you like, hey, just save a life, or you're just trying to, shove your head through the windshield or something. So it'll kind of try to remind you to help you get a better discount. But so the premise of it is this. Today, the program has a participation discount of 10%. So just to try it, it's 10%. You have to keep the device in. You have the option to either do a mobile app or the plug-in device. And if you do the plug-in device, they will mail it to the customer. They plug it into that USB port, not USB. No, it's not. It's ODB. Thank you. The one that the mechanics plug in, the diagnostic thing.
Okay.
It's usually under the steering wheel. You just plug it in. Forget about it, other than when it beeps at you, and then you'll get an email that says, "Okay, turn it back." And then they give you a box and a return label, and you just send it back. They'll tell you what your discount is, okay? And if you have a discount. So in the old days, you couldn't get surcharged, right? There was no participation discount. You couldn't get surcharged. Now you can actually get surcharged if you're really horrible. But the surcharge will only be up to 10%. And what we have found is that 90% of the people who have surcharged on Snapshot still renew, because when they shop, they find I'm a really horrible driver and nobody wants me, and it's a pretty good rate. So
does that information get shared with other insurance, or does it go into a pile, a pool of
Just your data.
data?
well, you know, that's a good question. So we do collect the data, right? We collect the data to try to rate better.
So you're saying is I only have to drive really good while I have that thing plugged in?
Yes, that's what I'm saying. So this is actually really good for people who have, like in my family, I have a company car. So I have a car that used to sit at home until my daughter became a driver. Now she drives it, and you know. But so, you know, that's why I got the 30% on that, because when I tried it, that thing sat in the car, I mean, in the garage all week long until the weekend, and then we drove it. So it will rate off of time of day driven. And what it means by that is, as long as you're not driving, you know, between midnight and 4 a.m. on a regular basis. So, you know, what it's trying to avoid is shift workers who are on the road consistently at night, at that time of night, because it's a more dangerous. Data shows.
That's when the bars close.
Yeah, that's when the bars close, right. Now, if you go out on a Saturday night, that's not a big deal, right? That's not going to mess you up. It will also look at mileage. So it's looking at probably about 15,000 miles or less per year, which is pretty generous. And then it looks at hard brakes and fast starts. Okay. So that's when it beeps right at you, and you go, you're like, oh, okay, you know. So it looks at that, and it looks at those rating factors, and you can also check your progress on the site. You know, it'll give you a link to check your progress and all that stuff. I did the device, and it did not bother me at all. It was fine. And then it was only in for, you know, like I said, it's only one policy period, and then you send it back, and you'll keep the discount for as long as you renew the policy and you have that car. But some people are doing the mobile device now. I don't know how I feel. I don't know how I feel about that. I didn't use it, so I don't know. But it says that it should be able to tell when you're the driver and when you're the passenger, just from the mobile app. Yeah, I'm not sure. And I said, well, what if you're on a train? Or what if you're on a bus? Or what if you're on a plane? How does it, you know, it knows. And see, I'm just, yeah, I don't know. I like the device. But yeah, a lot of people like the mobile app.
So does it go into a pool?
Oh, okay. So I'm sorry, to answer your question. So we collect the data. I don't know. I know that other companies have contacted us to try to help develop their products on it, because we had it copyrighted and all that stuff. So I don't know if I would assume we share some of those results. Yes.
And so they give us a higher rating too. So I'm assuming you do it, so if they go somewhere else, they get a higher rating.
Yeah, well, yeah, I mean, you know, it's like when we were first rolling this out, everybody started freaking out, because when the product first, when the product first started, it was this big old thing that Circuit City had to install. Do y'all remember Circuit City? Oh, God. Yeah, if you wanted to do this, it used to be a GPS device, and Circuit City had to install it. We were testing it here in Texas, and we had an agent test it, and his wife had gone to the mall, and somebody stole her car. And back then, we could do all kinds of stuff. It was like OnStar. We called the car, we spoke to the thief, told him, we know you are an unauthorized driver, pull over, and we're going to shut the engine off, and did all those things. He didn't even get out of the parking lot, because she called right away. You know, she's like, hey, somebody stole my car. It's not where, you know. So we said, okay, so we were able to do that. What we found was people were not comfortable at all with that. Well, OnStar wasn't around yet, and so people love OnStar now. But back then, you know, it's 20 years ago, people were like, whoa, no way. So anyway, so it's evolved, and then it became this just little device that you can plug in. And so we have mountains of data about all of this. And what we found is the products evolved as we've kind of looked at our data. And we used to think, okay, we can do this as a discount or not a discount. And what we found is that no, some people need to be surcharged. Some people are bad. So, but the surcharge is capped at only 10%.
So if you, I'm sorry.
No.
So if you have a bad driver but never gets into an accident, how do you rate that?
Well, it's just going to rate them off of, the only thing is, it will only do the 10% surcharge. So, I mean, they'll be rated the way they're normally rated with that 10% surcharge. Yeah, that's it.
Do you encourage that we promote SNAP or not?
I like it for people who are a good fit for it. And what I mean by that are people who have an extra car, or somebody who's retired, doesn't drive a lot. So, things like that, because they are paying a full, it's like they don't drive the car all the time, but yet they're paying full-time insurance for part-time use, right? So I think it's a good solution for that. I really do. Or you've got somebody who, like kids, the rate just jumps through the roof. And so I did it as a test on my son. I would never put it in my daughter's car. But on my son, he's very responsible. The kid got, almost 15% off, and, it helped with the rate and all that stuff. So,
So it's just a one-time use, not like the share and drive that State Farm has?
No, it's just one-time use, yeah. Yeah, State Farm, I was trying to be sneaky one time and, check out State Farms, and
They have, because theirs.
I was so confused.
Theirs, they plug it in, and then they have to update the app every so often so that they could get all the information.
Yeah.
Sure that, and then if you don't do it, it takes off the discount.
Yeah. And I heard what you said about the driverless car thing.
Oh, yeah.
I have that same suspicion that they're gathering all of this stuff so nobody drives anymore.
I think it's crazy.
Yeah, but
and I'm really frightened to be on the road with them.
oh my gosh, that one girl that got run over by one. So yeah.
All the cars go driverless. Why do you need insurance?
Yeah. Well, you should hear the conversations at our meetings about this driverless stuff. How do you cover that, right?
Yeah.
How do we?
Who's actually responsible?
Who's responsible? Who's at fault? Who? Yeah. Yeah. No, I know and somebody had, I know I'm getting off topic, but somebody had this story about driverless cars. It's like, you have that human judgment, right? So say you're following behind a school bus and there's oncoming traffic this way and a big ditch that way and a school bus in front of you. School bus stops. What do? Do you go this way and kill that person? Do you hit the school bus or do you decide to just take the hit yourself and take the ditch, right?
Take the ditch.
Right. People would take the ditch. What does the driverless car do? Yeah. So anyway.
It's still going.
Yeah. It's hitting the back of the bus.
Right.
Yeah.
Yeah.
So how about the rental car?
I'm sorry.
How about the rental car?
Oh, the rental insurance? Yes. Y'all have the ability to write in rental insurance today. So if you select that, you can go in and cover rental insurance as well. Okay?
Yeah.
Mm-hmm. And you can bundle that way.
Is that rental for the cars, correct? Or just our home?
Oh, I'm sorry.
That's because that's what she
Rental for the car. Yes, that's what that is. But y'all also have the ability to write a renter's policy. I'm sorry, I misunderstood. Yeah, when you're picking your products, you can go to rental as well. And then this is the deductible savings bank that we were talking about. Now the system will also tell you the applied discounts that you have and the ones that you don't have yet. The ones in blue are the ones that you could add on if they had that. So, okay. And then it just tells you what the bill plans are. And here under options, well, we're going to get to a really busy screen in a minute, so I'll wait. It's not very clear, is it?
No.
Right?
No, it's not.
It's not. Okay. Thought it was just my eyes, but it's not very clear. Okay. One thing that I want y'all to remember is that when you're running a rate, it's going to ask you to run Clue and NVR reports, right? Unless that customer wants to buy today, I would not run the NVR. Now, on the main screen, I have like a little laser. No. On the main screen, there'll be a box here and a box there. You can uncheck the NVR box, and it will only run Clue. And that will give you an indication of what do they have on their record, is there an accident, that kind of thing. Because Clue is the database that insurance companies report into when there's claims. So you can find that. NVR should only be run when you're ready to sell it, okay? And the reason for that is because NVRs cost $7 a piece. We will pay for all of them as long as you sell 70% of the NVRs you order, okay? If you don't hit that ratio, you know, if you don't sell 7 out of 10, then we're going to charge you for the unsold NVRs, okay? Just the unsold ones. But so don't run NVR just every time, okay? Wait until they're ready to buy, and you can just uncheck that box.
Okay, so then how accurate is the quote without the NVR?
Well, you have asked them, do you have any tickets or accidents? And I don't laugh because I know that, nobody has any tickets or accidents. But I mean, really tell them, I'm going to run NVR, so we're going to know. So please think, does your wife have any accidents, tickets, that kind of thing? Do you have any? And tell them, if when I run this, it may go up if it finds something. I mean, it's just part of the insurance gig. But
if you ask them and they're honest about the things that they have on their record, will it still rate them at a higher price after you run the NVR? Or
no, it'll match it up. So if you put it in there and it has the same ticket on about the same day, it'll match it up. Yeah, if you're not sure of the exact date, I would just put like 1/1 or 3, whatever month 1 and the year, and it'll match it up. Okay, and there's also an option in here to dispute something.
Oh, that's good.
Yes, so you can dispute if it's incorrect. Okay. Okay. I'm not getting any better at this. Okay. So this is that really busy screen that I was talking about. I'm going to see if there's anything. Paperless, like, yeah. Okay. Okay. I think the most important thing on this right here is this part here. So under the options on every page, you'll see this there's a little thing that says options. You can save and exit the quote there. You can duplicate the quote so you can save a copy of it. You can print or email the quote from there. And then you can add a comment or reminder to yourself about the policy. So the emailing of the quote is really kind of a big deal because, one, it allows you to get the email address, which is a very good contact resource for the customer. If you don't sell it today, we will store that information along with the quote information for you to follow up with them next time at their next renewal. So you can follow up with them and re-quote it, update the quote, and then just email them, you know, the quote, or, hey, thanks for giving us a shot last time. Just want to let you know I've updated the quote. This is what it looks like today. Give me a call. You can do all that from the system. Okay. But emailing that quote, because think about what you do when you shop on things. You're writing things down on napkins or paper or whatever that ends up you can't find. Yeah. And so customers end up just getting tired of shopping and ending up with the person they're, fine, I'm here. I'll just might as well buy it. If they have the email quote, they know exactly what was quoted. They know where to find it. You can tell them I'm going to email you this. You give it a better shot of closing that business. Okay, and then this is just showing you the summary of everything. The summary of the products quoted, the coverages, the initial down payment, and the bill plan. And it'll give you any kind of alert, and then it gives you the print email option here too. Okay.
Did Progressive used to have an annual
Yeah, actually we did. When we first started, that's all we had was an annual policy. And it's funny because when I first started as a rep, I used to get beat, you get beat to a pulp about certain things, and that was one of them. So it's like, why y'all have annual? State Farms has 6 months and Allstate has 6 months, and it's not apples to apples and all this stuff. We got burned one year because we were a county mutual. Filings for rates are different, right? I mean, they're actually a little more flexible. But when you have an annual policy and you go file to correct a cat loss or something like that with your rates, we got to wait a whole year for that to start taking effect on our bottom line, right? And so with the 6-month policy, we have more flexibility to react to things, either lower rate or raise rate if we have to keep that, that 4 cents, that 96 combined ratio, which is what we target. So we used to only have the annual policy. There's still some on the books, but now it's 6 months. Now, I will say this, with the introduction of our home policy, if you're a home agent, you do have the option to do annual auto to match up with that home.
Very cool.
Okay, so that's available.
Wasn't it used to be about 40% discount?
I'm sorry.
We got a 40% discount for paying.
I don't know. I don't know what it was before. There is a little bit of a discount for annual. I don't think it's 40% though. Yeah, I don't think it's 40%. But that's why we went to the 6 month. We went to 6 month because we got behind. We needed to make adjustment in rate, and it was back in the early 90s. And people were exiting the state and all this stuff, and it was a pretty high loss, volatile market. And we implemented a change, and everybody else was able to recover 6 months. We had to recover that whole year. And I think that was the 1 year that we did not hit our 96. So that's why we're a big believer. Not say we won't ever do annual, because we are offering it for the home product bundles, but that's the thinking behind it. It's just more flexible for us. Mm-hmm.
On the screen that you were previously before, on the old system, I know when you used to do the verification binding,
Mm-hmm.
like you like really big letters of bulk binding. Now, right in the middle, it's very small orange letters. It's not on your screen right now, but once you normally have it, it's very small letters. And you see the verification binding, very small print, and all the agents are missing.
Really? You talking about the pre-binding?
Yeah, and it says it like if you go back, and it comes out right here. No, you're actually over the right spot.
Oh, I was? Okay. Sorry. It does good going back. It's just going forward it has problems with.
Okay. More back or whatever you choose. Okay.
Okay.
So right here, I'll say it right here. Binding verification, very small orange.
Okay.
So I had talked to the other market rep. I go very small, and a lot of agents are looking at. I was happy they're taking the whole payment, and when they get to the very end, they're like, "Why can't we process the payment?" And then they're like, "There's an error," and like, "Oh, it's a perfect."
Okay.
It happened quite often. It's been happening quite big.
And it used to be really big. I know it used to be really big.
Yeah,
it used to come across the whole screen. Yeah.
You won't even notice it, and you only see it on that screen. So
okay.
Not on no other screen. So I don't know that's something that you have to look into, or
yeah, I'll send that up because that's good feedback.
And what they did tell us was a small percentage of clients that the 3%. So I know it's not all clients.
Yeah.
But those 3% that 2%.
Yeah, no, they are. And well, the other part of that is it's just my fear for that kind of thing is that I don't want it to make y'all so uncomfortable that you don't want to quote the product. And have any of you guys run across pre-binding verification? Yeah, it's a pain, right? God, I hate that process.
Because I have a used car dealership where I do buy your favorite.
Mm-hmm.
So most of my inventory is the rebuild titles, so they're salvage titles that were.
Mm-hmm.
So that's where I usually.
Oh yeah.
I guess if Progressive had paid off the claim on that vehicle originally, it won't let you do it.
Right.
But if it's from somebody else, it let you do it.
Well, we don't do salvage titles. We don't like salvage.
There are rebuild titles on it.
And they did it.
My personal car's on it.
Okay, well, it's going to try to catch them because it's not something, because.
Don't give me your name. Don't give
Yeah.
me
Well, it's going to try to catch them because we don't, sometimes on these rebuilt stuff, I mean, it's ridiculous. You'll have a VIN number that go on a Dodge that says it's a Chevy. Right? I mean, it's.
We don't, okay, I don't do that.
No, but I'm just saying, but that's why, because we don't know what it is. You know, we think it's one thing based off the VIN and it's a different car.
So Art's asking for a friend.
Yeah. I know nothing. Yeah.
Well, can't the car be labeled salvaged so that you can know?
Yeah, but we don't want it. We don't want it because. Well, we don't want it because we don't know what it is. We don't know what it's been through. It could even be one of those flooded out cars from Houston, which is, you know, we're all trying to find right now because nobody wants those either. Because it's not a good risk. You excluded, of course. But from an insurance standpoint, it's because we just don't know. We don't know what it is. We don't, you know. Yeah, we don't know. So that's thinking behind that. But
Quick question about the premium.
Oh, yes.
I know you got the total premium. Now, if they pay in full, I know before if you pay in full, you get a discount. They
yes.
don't offer that anymore.
No, you do still get the paid in full discount. Yeah, paid in full discount's really great actually. So, but yeah. No.
The pre-binding verification. What's the fastest way to clear that? Because in some cases that we've had to wait 4 or 5 days.
Okay, so
what happens is the client says, well, if I have to wait 4 or 5 days, just put me with another carrier.
yes, and okay, so you know, I'm a salesperson, right? So I hate saying go somewhere else.
Yeah.
I hate it. This is what I would do. So if it's somebody who needs insurance today, you do not have time to mess with pre-binding. Go somewhere else. If it's somebody who needs it probably in the next week before their, you know, week or two before their policy lapses, go somewhere else. And I say this because our process is not great around this. And so when we talk to the product managers about it, they say, well, we don't want that business. That's why it's flagged. We don't want it. And my contention is, I know what happens out here. Sometimes it's something really innocent that just needs to be cleared up, right? If it happens and it's somebody that you really want to go to the mat for, it's somebody that has the time to go through the process. You know that list of approved documents that pops up? It has to be that. It cannot be any variation. It cannot be any other document that you send in as proof. It has to be what's on that list. And part of our frustration with it, and I get it because this group that does the pre-binding verification clearances, they must be in a bunker somewhere because all we have is email access to them too, like you do. We can't call them. We can just email them. So it's very frustrating. And they're thinking is, look, if everybody was calling them all day long, they'd just be barraged, right? And it's like, yeah, I get it, but it's frustrating because sometimes you just want to know what's wrong and you've got to email, and even I have to email. So if you can avoid writing it, avoid it. But if you are going to go through it, be sure that you're sending them exactly what's on that approved document list, because if it's anything else, they'll kick it back.
And they're pretty easy. Well, I can talk because I sent a customer came from the State Farm and they got the pre-binding. I'm like, I got pre-binding. I was confused. But I was like, okay, regardless, we kind of didn't mind it.
Yeah.
So I was like, okay, send documents in. But he moved into an apartment. I'm assuming that apartment has been flagged. That's what I assume. So anyways, we sent documentation. And well, when they moved in, we sent documentation, and they're like, well, we need more documentation, and we send them some bills, but we send the light bill because I guess the contract just you just start a contract,
Mhm.
and then they're like, they need more building. You just need them. And if he's a new customer, who just moved over there, can you please help us? And they send back, okay, approved.
Okay.
And they approved it.
We
So,
had.
I mean, it's just, I mean, it's really just like, communication, talk to me, hey, I got this, what can we do? And they respond to like a human, not an automated machine.
Yeah.
So
Yeah, it is human. Yeah, it is. Did you have a question? Well, but yeah, so the pre-binding, that's a really good example. I have an example too. So, I live in Kingsville. So the King Ranch, if you work for the King Ranch, you live on the King Ranch, they give you housing on the King Ranch, they give you utilities on the King Ranch. So they have none of these things to prove.
Where do we sign up?
Yeah, I know. I want to be a cowboy. Right? But so yeah, so we were having trouble with that, with the pre-binding stuff, because they would get flagged because they had PO boxes, and then when they had to go verify their address, and the other problem we were having are the man camps with all the oil field stuff. Same problem, right? They're not, and we were like, oh gosh, you guys don't understand Texas. That's what we kept telling them, but yeah, they didn't laugh.
So I know we talked about this when the first came out. Let's say, for example, let's say you have two parents. Let's say you have two married couple policy, and you have a minor, and then let's say their child, and you're doing the policy, and then we want to write the policy, and they're like, well, right now my son's in college, we get what the rate's going to be, but you can't run a clue because you're missing the driver's license on one child. And prior from the old system, you can still run a clue, regardless of a driver's license, you still run a clue on the people that physically have driver's licenses, and then you run a clue again when you have them. So now you only have, now with the new system, if you're missing one driver's license, you can't run a clue on any.
Really?
Yeah, so then I was thinking, but now it's like, okay, now we gotta wait for everybody.
Okay. Good. Thank you.
Now the MVR, you get that part.
Yeah.
But
the clue, you want. Well, the clue will give you an indication whether they're actually telling you everything, right? Because sometimes people,
car accidents or
yeah.
Car accidents.
Yeah, my own cousin, right? When I became an agent, it's like, no, I don't have anything. It's like, really? Don't you gotta love family, right? When you ride them, they only come see you for business when they're a problem.
Like, you must be really bad if you're seeing.
Yeah, exactly. Been doing this for 10 years now. You just now coming. So anyway, this screen shows you where you can put the lien holder and do the disputes on those violations that we were talking about. And then see, that's what the point of sale looks like. You can uncheck the MVR. Okay. I know I'm running a little long. I'll hurry. Okay, I'm just gonna go through all this because when I saw this presentation, I thought this is too wordy. And okay, so this is the old system, but I wanted to just kind of show you a couple of things because I thought it was a good slide. Remember we talked about that $2,000 deductible? So you can use this sometimes. So in this example, we raised the deductibles to bring premiums down, and we went from $500 to $2,000, and it lowered the rate by $320. So I mean, just remember that if you've got one of those risks that's kind of crazy, it's not a bad thing. Okay, and then that's the savings bank. Okay, we've already talked about MVR. EFT, you guys know how to do the routing number and the bank account number and all that stuff. Okay. And then pre-binding, we've already talked about that. Okay, the policies needing service, it's going to tell you if y'all need to follow up on e-sign or paperless. Have y'all had to do that? Do y'all do e-sign where they sign online?
That's good.
Okay. Okay, so this is just the paperless follow-up that you can help them with. Can y'all read that?
No.
That's really bad.
It is really bad. Okay.
We'll go by what you say.
Okay. So what's going to happen is when you sign up for paperless, it's going to send them an email that says, welcome to Progressive. They need to go in there and it's going to give them a user ID and password, right? And they got to go in there and verify their email and then click. Everybody misses that little box that says, I understand, and then submit. Okay, so that's the thing with paperless. It's just going to give them the user ID and password so they can go into that Progressive app and then they can verify their email and say, I understand. Okay, you going to take a picture? Okay. And then same thing with the e-sign. The e-sign, when you go through e-sign, it's going to give you'll see that you can ask them, can I see your username and password? They say yes, then you can help them go through the steps to get that done because they should get that.
I got a question.
Yeah.
So I know when you do the e-signature follow-up or the e-signature in general, the customer has to create an account online, then they do a signature account. Why isn't it on 4020? Why isn't one of the policy? Why can't we just do the e-signature there? I've always wondered.
Because you don't want to be able to do that because then you would be accused of fraud.
Because it's electronic signature. So
yeah, because it's an e-signature, so it has to be them. Yeah, and it's too fuzzy if we do it that way.
Makes sense.
Yeah. So same kind of process. It's going to give them the user ID. They've got to go in and make that account and then go in and e-sign the documents. Okay. I'm not going to do motorcycle because I think I'm running way late, right? You sure? Are y'all bored? Okay. Motorcycle is the easiest thing to sell and lots of people have motorcycles. Yes. Oh my gosh, it's so easy. A lot of people shy away from it because, when I first started selling, it was like, I don't know what a CC is and all this stuff. They'll know. They will know what their bike is like. So, we are the #1 writer of motorcycle insurance and independent agents. And there's a reason. We have really great product for motorcycle. So it will pay, the total loss will pay them like for a new bike. So, we don't do that depreciation on that. And then we also have things like trip interruption. So it'll pay up to $500 for occurrence if they're over 100 miles away from home. So say they have to get a hotel or something because they're stuck on the side of the road and they're 100 miles away from home. Yeah, they can file a claim. It'll also include covered losses for breakdowns. So, I didn't know this was a thing, but motorcycle people think, oh yeah, because apparently it happens a lot. But anyway, accessory coverage, we have $3,000 included because, people drive this bike off and they'll know. But like, I'll go, oh, that's part of the bike. It's like, oh no, it came with this, and it came with that. And that's all accessory stuff. So they can actually buy up to $30,000 if somebody really tricked out their bike. But it comes with $3,000. And there's no depreciation taken on that. And it includes safety and riding apparel too. So, and then we also do carried contents. So if they lose stuff, carried contents on their bike. We like to say if you pick the bike up and shake it, everything falls off. That's the carried contents. We'll pay up to $3,000 on that too for personal effects.
On that trip interruption, is that just like it breaks down, or is it like weather, or what?
It could be you're 100 miles away from home, and something has happened, and you cannot complete that trip. Like so it could be weather.
Okay.
I think it could be weather. No. I think it is weather. I mean, it's anything that's going to interrupt that trip to make you stay where you are. I mean, you've got, it breaks down, whatever.
Run out of gas?
Well, it's got roadside assistance. Okay, so this is just a picture to show you what customized equipment, that additional equipment that we were talking about. All that stuff, I wouldn't think it was anything extra, but it's extra. Anybody a biker in here? Yeah. The other thing is, we do ATVs, you know, so we can do those ATVs on the hunting ranches and things like that. Same kind of thing. Off-premise coverage is covered. Why is it
Those are more reliable.
Oh yeah, and then they are actually more reliable, safer too, I think.
Yeah,
But and it also has the total loss replacement, carried contents, and then also youthful drivers, you know, because that's probably who's going to be driving it too.
What does it cover when it comes to injury?
Injury on the ATVs? Well, if you've got the liability, so the liability will cover that, and then if there's any kind of medical on there, it's the same thing as an auto.
So it covers dead also.
Okay, this is just a picture to show you the different accessories. Okay, and then the additional perks, there's no depreciation on partial loss. So I know other carriers will do that. That also applies to our RV program, which for some reason awnings are a big problem with RVs. They always get damaged and then they get paid depreciation. We don't depreciate that stuff. We use market parts, small accident forgiveness, large accident forgiveness after they've been with us a while, disappearing deductibles. As they renew with no claims, that deductible goes down $25 until it goes away. And then roadside assistance. Okay. Thank you, guys. Any questions? Yes.
I just was wondering about how USAA, because I haven't
USAA, we actually write some for USAA, actually, yes. So USAA, I'm not going to lie, USAA has a great product. They actually have one of our product managers over there now too. But no, they do have a great product, and they are hard to beat. But we do write some of their surplus stuff for them. If you run up against a USAA person, depends on who it is. Again, you just got to plug the rate in and see if we can beat it. But I will say that USAA is a good. They're not as big as we are, but yeah, they have a good niche. Yeah.
like your military town and stuff like that, I'm assuming that runs high.
Yeah, but we ride a lot in military towns. Okay. Yeah, we ride a lot. Yeah, we do. Yes, we do. And you know, the reason is because every company is going to have their niche. Like USA is great, but they have a niche, and at some point, rates start. You know, if you're not perfect or you're outside of their niche, then they're fair game. So, well, military obviously, but they like you know, the cleaner. Well, auto and home is great. Yeah.
So I know. So I know we talked about the educator role. We give a discount for educators, right?
Mm-hmm.
What about military? I know I don't really see good discount for military.
Well, you can put that in occupation. Mm-hmm. Yeah. And also, if somebody's deployed, we will we won't show that lapse in coverage when they come back, right? You know, we'll honor that there was no lapse in coverage, so it doesn't ding them. But
regarding the deductible savings, upon renewing, does that money roll over, or how does that work?
No, it'll as long as you have that policy, it will just keep building and building, and there is no cap on it.
Okay. And what if they don't renew?
Well, then they lose it. That's why you tell them, why would you go? You're going to lose $500 in your deductible savings bank. Mm-hmm. So how many of you guys are comfortable today riding Progressive? Okay. How many of you guys not real sure because you just haven't used it enough?
Well, we just got our license. So
Just got your license? Well, I'm going to give y'all a number because there's an agent helpline, and it's 1-877-776-2626. 2436. You can call those guys. They are 2436.
They're amazing.
Yep. You can call them 24/7. They will walk you through a quote. They'll answer a question. They'll look up anything you need. They'll ask you what your code is, so you got to know your code. But they're amazing, and they are there to help you become comfortable with the product too. So don't hesitate. I mean, they're a great resource. I wanted to do some kind of an incentive for you guys, and it was kind of short notice and all this stuff, but and Florida's going to be really mad. But but so we want y'all to become engaged with us. We want you to be more engaged agent. We have a great product to offer you guys. We are number 3 in the nation. We are very well distributed. We have great claim service, and we will make your life easier once you start writing with us, because we don't have a lot of the hiccups with claims and service and things like that. We have a really good system in place. So we would like you guys to really become engaged. So what we're going to ask you to do is, if y'all can write, and I'm going to ask y'all to help me manage this, okay? Because y'all got to keep track. So you're going to tell them. But if you write 10 policies between now and August 31st, and it doesn't matter. It can be motorcycle, it can be commercial, it can be auto, whatever. Progressive policies. Then we're going to put you into a drawing for $500.
Yeah.
Okay? But y'all are really great, and I'm very excited about this. I mean, George and David and I have worked together for a while, and we really want to partner with you guys. I think y'all are a great organization. You're a bunch of good agents, and I think we can make this thing something really big and really successful.
All right.